guys, welcome back to the channel. What we're going to be doing today is a little market review on all the different asset classes. So we are going to start off with a bit of dollar to start off. As you can see, prices heading lower. It respected that 0.5 level, but we ideally want to see it break. Would rather see it go lower than higher, back up into there. On the weekly, you can see this wick respected that order block, and this next week was held in a range, so potentially this one to now take these relatively equal lows. And yeah, look to head a bit south. Hit that one standard deviation, went fairly into the middle where it could, and is now moving. So if this is going to move pretty well, it will move down to the second standard deviation, create equal lows, and then come back up to a certain degree and then continue lower. So yeah, this is also another one of these, and you can see that one's first standard deviation is here, so matches up nicely with the second deviation over there, standard deviation over there. So now we've got that out of the way. That's the daily chart. Let's move this for the new month. Want to see high in the yellow area, optimum trade entry in the green area, and low in the light grey area, next optimum trade entry in the darker grey area, then reaches trade terminus in the blues area. Now this is the weekly version of that. Let's check the weekly. High, optimum trade entry, low, second optimum trade entry, low. So that's what we are predicting at this moment in time. If we want to see a sustained price move lower, we need to see dollar break this fair value gap. If it does, and it starts breaking like the high of this candle, even the consequent encroachment, then we can look to see it continue lower to there. Would ideally prefer it going lower to there before it reaches here. The reason being is this is now a balanced price range, where this candle and this candle overlap. There we go, that's a balanced price range now, so we'll use blue for that. So yeah, reason is went up, done a lot of buying, done a lot of selling, so it's balanced, it's efficiently delivered price. So now it would want to take out a low before going back up there, to give another entry short, potentially. So that's what we are predicting right now for the dollar. We are ultimately bearish and bullish for foreign currency. So bullish to where? Waited on this turn on the 1 hour. It was quite a while. This was all the NFP price action, but eventually respected this and started creeping up, where we ended up getting an entry around here, over there. Went up nicely, just waiting for it to continue higher, seeing if it wants to break this 4-hour candle. This is also the 4-hour candle on euro. it's broken higher but on a lower time frame, would need it to break higher on a higher time frame and then come back into it as an inversion fair value gap to then continue higher. That's what we're predicting for euro. So potentially up into there's our next targets, into there. Ideally you would want it to reach here by the end of the week. We're aiming for price to reach here. That's our aim. If it respects this and starts turning and goes into there, then we'd have to expect price to start reaching the low, potentially this low, potentially in here before it starts making its way higher. But at this moment in time, it's more bullish than bearish. We just need, in the next 7 minutes, if it can start pushing lower, that'd be great, because this closes in 7 minutes, the 4-hour candle. This is also closing in 7 minutes, so yeah, along the line in these next 7 minutes. But yeah, ultimately bullish. We'll see if it wants to respect that. If it does, we're going to start exiting positions, but we have faith in our bias to continue going up here. So we've done euro, done dollar. Let's do a bit of this. Yeah, it's more bullish than the other two. But still bullish. Went lower back into the order block before continuing higher. So yeah, we're looking for price to break that and seek higher. On the weekly, expecting price to reach that 1 standard deviation level, and then eventually that standard deviation at the larger range. So that's what we're expecting. Bullish price action, really, ideally. Yeah, that is it for that. Let's look a bit of bonds. So bonds dropped a fair bit. What we need to see from bonds here is price start reaching for this high and close above here for this week. If it does that, then it's better for next week for us to predict that it's going to go lower into potentially half this range or into here to then continue higher. So we would have to see that bullish move if dollar is going to go down and we're going to get a sustained bearish run on the dollar. For that bearish run, we have to see this go bullish. Same here and same here. Both of them need to break at that high, and we'll have a chance at continued bearish run on the dollar. Let's look at ES. ES ranging up here. If we look at the monthly, broke it, so potentially won't see price coming back into there or not fill it completely until it reaches that. NQ, same thing, not reaching this level until it seeks those highs here, because the others are moving. It's probably going to force it to move higher than this and then come down, uses the inversion fair value gap. So that's our indices, bonds and currency done. Let's just have a quick look at gold. On the weekly, it's ranging at the moment. you know, bear, oh, there's a lot of war going on, oh, we're broken, peace deals. I do believe it's eventually going to take those, but gonna have to be a while before it does. It's respected this. This needs to start breaking this level if it wants to continue higher into there. But yeah, that is all our predictions for gold, bonds, indices, and currency. If you guys enjoyed, please leave a like. If you want more, please subscribe. Turn on notifications so you're up to date when I go live, so you don't miss out. And yeah, thank you for watching, and